Hey everyone, I'm Steve Rhode, the old, authentic, original, the aged Get Out Deck guy. And with me, as always, is the new, fresh, refreshed Get Out Deck guy, Damon Day. Say hello, Damon.
Don't let my gray beard fool you.
Well,
Hello,
nobody can
everyone.
see, nobody can see it, so they won't know you got the Santa look going on.
Well, we're getting close to Christmas, Steve.
Hey, we got a packed show for you today, and it's a wild mix of, are you fucking kidding me? Or, that's actually genius. First up, there's serious talk about a 50-year mortgage. Yeah,
It's been all the rage the
50.
last 2 days. It's been everywhere.
Yeah, we'll see what happens. It's being floated as a possible fix to housing affordability, but we'll unpack what that really means and who it might help and why it might just be a trap in disguise. And then we're shifting gears to something that can actually save you money right now, about how you can use an online tool that's free to slash your grocery bill. And I'm not talking about some BS hype. We'll share a few clever ways people are using it to meal plan, find discounts, and stretch every dollar. If you want to save money and you want to be smart, wait for that segment. And then finally, maybe we should talk about it first, but we got a Meaty Mamma update. We saw her latest video, and let's just say she's back at it, and it's worth talking about. So stick around. This one's got finance, tech, a little hug and love for Meaty Mamma, and some good old-fashioned podcast love. All right, Damon.
Steve.
I guess we should talk about the Meaty Mamma thing. So there's this person on YouTube. She goes by Meaty Mamma, and she does all these gig app things where she's trying to make money and pay down her debt, and she was just totally burning herself out. And Damon and I were getting concerned that, she needed some, what we thought was good third-party advice to help her make some decisions. So we did a YouTube video. It's on the Penny Stupid YouTube channel that you can find it. And we got a little bit of a response, a teeny tiny response from her. You want to describe it, Damon?
Yeah, and I think we turned it into a podcast too, didn't we? The
Yeah,
Meaty
we
Mamma. Yeah, so it's on the
Mhm.
podcast. You can find it on the podcast show as well. But yeah, I was randomly watching one of her videos like 2 nights ago, and I just happened to be listening, and she said something like, and I watched that video from those 2 dudes, and I went, huh?
What?
Well, are we the 2 dudes of which she speaks?
I think so.
So I forwarded it to Steve, and this was like, I don't know, 9:00 at night his time, and I'm like, I think Meaty Mamma saw our video. So apparently people that saw it had told her about it because but I must have slept through the very beginning, because the beginning of her video she did say she did see our video and was going to be reaching out to us. So I haven't heard from her yet, but I'd be more than happy to listen if she does reach out and offer any advice that I can to help her out. But
and you can get Damon at damonday.com, DAMONDAY.com, and you can reach him there if you want to talk to him for advice and tips.
Yeah, I was just excited that it worked. I was like, wow, we put out a video, and through the power of the internet, it got to the person it was supposed to get to. So that was, and fairly quickly, within 2 weeks, she did that video. I don't know when she saw it, but before you reach out to me at damonday.com, you might want to listen to my newest fan, because he actually made a comment on the Meaty Mamma short that I did on our YouTube channel.
Do tell.
So my new fan, he is Chico Juanito 2.
Not one.
He's Chico Juanito 2. And in his comment, which filled me with the warm fuzzies last night, starts like, it goes, idiot! Exclamation, exclamation, exclamation. Home prices can't go any higher. Now is the absolute top of the market. Now,
really,
that was not enough for Chico Juanito 2, because 2 minutes later
he had to say more. He
came back before I even had an opportunity to respond, he came back in the same video and added another response and says, he's just lying. There's not a single gig tuber talking about $40 an hour. Because I talk about when I go out and drive with my strategy is I typically make $40 an hour. So,
and that's what you make.
Yeah. So, I mean,
it's not a lie.
Chico Juanito 2 is now our biggest #1 fan, and a big shout out to him. But idiot, he has called the top. He has called the top, and I'm an idiot. Housing prices can never go higher, ever.
Well,
he's called it.
I don't know how old he is, but I did see another comment from somebody. I'm not sure it was on this video, but they said, I think they said, you are right. I just filed bankruptcy and my credit score went up.
Yeah. I think she said 30 points.
But yeah, I mean, that's what we talk about.
Yeah. I responded to Chico Juanito, and I was like, I basically said something like, what was everybody saying in 2004?
Yeah.
It's funny because in 2004, you had the two camps, much like today. You had the one camp that is like, you got to get in, you got to get in, you got to get in, because housing prices are running away. And if you don't get in now, you'll never be able to get into the market. And then you had the other camp, no way in hell. And this is 2004 I'm talking about. Housing prices are much too high. All the metrics are off. The average person can't afford the average house, blah, 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 blah. And it's definitely going to crash. And then when it crashed, Camp 2 was all gleeful and joyous. And see, I was right. But over time,
for a minute.
For several years, they were basking in their glory. But then,
not everywhere, but in only certain markets.
In a lot of markets, yes. But now, we're 20 years on. Hard to believe, 2004. That's the year I got married. Hard to believe it was over 20 years ago, but it was. It's a blink of an eye. Now the other camp is like, see, told you.
I remember having a very similar conversation with somebody that I really care about.
Yeah. Well, and the reality is, unless you're Chico Juanito 2, you cannot predict the top of the market. And history tells us that it's literally just going to go up forever unless the entire economy completely changes.
It'll go up forever.
Yeah.
No, it'll go up forever.
Now, it'll go up and down. It's not going to go straight line. We're probably going to have a correction at some point, right?
Yeah, but I wouldn't wait for it.
That's what I'm saying. You can't time it. We'll probably have a correction, and whether that correction lasts a year, 2 years, 5 years, 10 years, is Chico Juanito 2 going to tell me with a straight face that he thinks 20 years from now we're going to be looking back and going, yeah, I'm so glad houses aren't as expensive as they were in 2025 when we're in 2040? No. 2045? No, they're going to be... Inflation by itself will make the prices higher. So...
Well, let's jump back to Meaty Mamma. So I was encouraged by watching her latest video. Basically, she said, I'm done. I'm done worrying about the debt. I'm done slaving for the debt. She had lots of F-bombs in there, and, kudos. I love that. But she said something that, and she has her current perspective, whatever it is. I acknowledge it. I honor it. None of us, us is Damon and I, neither of us are trying to talk her into doing anything that she doesn't want to do. We're all about give you information and help you make the best decision that you can. But her current strategy, I would love to understand it more, is she's just going to make minimum payments and then save money.
Yeah.
And she says the debt will eventually go away.
Well.
Yeah. But
that's a very expensive row to hoe.
Yeah. That's a lot of retirement money that she has not saved at all that would be thrown away. So
we got her half there.
I would love.
We're halfway there. We got the mindset.
Halfway there. I agree with you.
The mindset of the debt is not the number one priority. At least we got that down. She's there now.
Yeah. One little baby steps, one step at a time. And I would love to, either you or I have a conversation with her and understand the situation more, because ultimately what you and I both want for everyone that we talk to and I'm sure that you convey this to all the people that you talk to, Damon, is I just want you to be happy and have a better life and, be set up for success in the future. That's it.
Yeah. Well, as I said earlier, life is short. I can't believe how fast 20 years have gone by. I feel like 2004 when I was talking about the crash and everything.
Is that how long have we known each other?
So 2000
20?
in, not quite 20, I don't think, because I believe it's 2008 or 2009.
Okay.
Yeah, it's like 2009. So
yeah,
15,
after I got back
16
from England.
years. Yeah, you were stateside when I met you.
Okay, yeah, I just gotten back.
Yeah.
I think I was just back. Yeah, I mean, look how much life has changed and the world has changed in that time.
Yeah, I mean, it's crazy. I think Evan was born and Hunter was a baby when I met you. He was a couple months old, and now Evan's in college and Hunter's a junior in high school. I mean, it's crazy.
Yeah.
So
that guy, Hunter, could whip your ass,
Hunter, I think every father of a son goes through a phase where it's like, yeah, I got the father power, right? I can beat him at basketball. I can beat him at this. I can beat him at this. I can beat him at whatever. I'm the dad.
Yeah,
I've got
now.
dad strength.
Yeah.
And then there comes a point with Hunter. It was earlier than I expected it to be because he's like a man child. But it was when we were playing catch, and all of a sudden one day I just noticed that I was afraid for my life. That ball was coming in so fast. Not only was this thing in my hand, I'm like, if I miss this ball, and I was over 40, so my eyes weren't as sharp as they were, and sometimes we're playing at dusk, after work and things like that. And I got to the point where it's like, I can't really play catch with him anymore because I am legit afraid for my life. Like if I miss this ball, I'm going to die.
I learned that lesson when you were here in North Carolina, and I met you at the batting cage.
You did. That was a funny story, actually.
You want to tell it?
No, you tell it because you lived it, Steve. You tell it.
So Hunter was hitting balls at the batting place.
Batting place. Damon, there you go.
I don't know. I don't know what you call them.
The batting cage. You said it earlier.
Oh, batting cage.
Yeah.
And so Damon was there arranging balls, throwing balls to Hunter.
Soft toss balls.
For a soft toss for him to hit. He was standing behind the screen. Yeah. And I figured I hadn't seen Hunter hit yet. So I figured, well, I'll just go in there and stand behind the screen with Damon and, we can talk while Hunter is hitting. And he threw the first ball and Hunter hit it. And I just went, nope.
You're like, I'm fucking out.
Out. I am out. No. Because I just realized, oh my God. He can kill me.
Yeah. Unfortunately, I have the fatherly obligation to stand there and take that fear. Yeah. You took one hit. I have to stand in there every time and do it.
I think that's all I said was nope.
That's all
and
you
walked
said.
out.
Yep. One swing. You're like, I'm going outside. Yeah. A lot has changed. So
okay.
I was trying to segue into the 50-year mortgage from what I was talking about with the housing crash, but I didn't know you weren't done with Meaty Mamma, so I apologize.
Yeah, no problem. This is the typical disorganization. I always say when people complain about a podcast or whatever, hey, you get what you pay for.
Yeah. And what do you think? This is scripted?
Yeah.
Did I sound like I'm reading something?
I like when I have websites where I publish newsletters or something and somebody complains about an article. All right, unsubscribe.
Yeah.
I mean, okay, 50-year mortgages. Wow. I heard about that, like you said, a few days ago and thought to myself instantly, that is a tremendously bad idea. I mean, like Emmy level horrible. Whatever the best prize you can give for the worst idea. Now, I think it was floated as people can't afford homes right now. So it's like, Damon and I have talked about this stuff, but there used to be only 4-year car loans.
Yeah.
and then they went to 6, and then they went to 7, and now they're at 8. And the whole reason for extending the term of the loan is to incrementally lower the monthly payment. So, and we'll get into your whole what the payment be argument, Damon, but
what be the payment?
Well, I was telling Damon that back in my day when I had a country property real estate company, that people would come out and they would never ask me, how much does this piece of land cost?
Yeah.
The question was always, what's the monthly payment? And the second part of that is, I was so committed to help give people information and advice so that when they signed the contract to buy the property, I would sit there originally and I would go through, okay, this is a paragraph here, this is what this means. Now we go to page 2, and this is what I wanted them to be fully informed as possible. And by the end of that, Damon, I was just like, here's the pen, and that's where you sign.
Yeah.
Because people didn't want to know. But so the car loan's extended to make the payments a little smaller, to make it more psychologically affordable for people.
To fit in their budget.
Yeah. So the idea of the 50-year mortgage is, if we extend the term of the loan out longer, then the payment will be smaller. But before I give these numbers, do you care to enter a diatribe?
Well, I don't even know what's going on with this whole 50. I don't know if there's something that was floated just to get people distracted from something else, or who knows what the motivations are of some of the stuff that gets floated out there. But, a 50-year mortgage, yes, will lower the payment, all else being equal. You will have a lower payment, but that's not going to fix the problem that it's supposed to address. So I don't need to get into all the specifics yet until you do your thing, but
okay, yeah. Let me give you the math.
It's a bad idea.
So the math is, if you're looking to buy a $400,000 house, and on a traditional fixed loan at about 7% interest, which is more than what it is today, your monthly payment would be around $2,600. And you'd pay about $558,000 in interest if you just made the million payments.
Yeah.
The monthly payments over the entire 30 years. Now, if you make it a 50-year mortgage, proponents are going to say it's going to lower your monthly payment. You'll be able to afford that house better. It would lower your monthly payment about $300 a month, but you would end up paying twice as much interest over the life of that loan. About over $1 million in interest over the life of the loan just for saving $300 a month. And Damon has a great argument about why the early adopters of the 50-year mortgage and why it really won't increase affordability. Engage, Damon.
And before I do that, did you see that Facebook meme I sent you? Something like from the Babylon Bee or whatever? What was it? Breaking news, Dave Ramsey in the hospital over news of 50-year mortgage. I about spit out my coffee on that one. But no, so what I was talking to Steve about, actually, last night we were talking about it, is it's just supply and demand, right? So obviously people are so focused on what's my monthly payment. That's how most Americans, and that's how most of us buy things, right? What's the monthly payment? The price of the house, the price of the car, it's almost arbitrary. It almost doesn't matter. If you say, hey, this house is $1 million, your payment is $2,500, people go, sweet. If you say this house is $500,000, your payment is $3,500. Oh, I can't afford that one.
No, can't do it.
So, but if we just put a Band-Aid on this and say, okay, we have to finagle the numbers to make it work within your budget. We need to figure out a way to get you into this house at $500,000, and we're going to say we got to shave $300 off your budget. Okay, let's do this 50-year mortgage. That means you're just paying a little bit, $300 less to principal every month, basically. And so you get in it, but what's going to happen is the market is going to adjust, just like everybody understands the market adjusts with interest rates, right? Everybody knows, hey, if you drop the interest rates, the price of the houses tend to go up.
Goes up.
Right? Because now people have lower monthly payments and the price is arbitrary in most people's minds again. So it's like, I got to get it under $3,500. Okay, interest rate is only 4%. I can afford a $700,000 house rather than a $600,000. Same thing would happen if they bring up this 50-year mortgage. Maybe the people at the beginning of this wave, as it becomes introduced, would get a little bit of a benefit from a cash flow perspective. But the freaking market is going to adjust, because if this incentivizes buyers to get off the fence and rush in, it's Econ 101, supply and demand. Now you got more buyers incentivized to come in. Now it shifts, and now homeowners can raise the price. So now what happens is, as soon as the market makes that adjustment, whether it takes 6 months or a year or whatever, now all you're left with is the same high damn prices. And now you're in a 50-year loan and you're not saving anything, because the price of the house has now adjusted for the fact. Think about this. If there was not a 30-year loan out there, let's say 15 years was the most a bank would do, I would argue that right now, all else being equal, housing prices across the board would be lower than they are right now if nobody could get a loan longer than 15 years. So if we carry this out, why not 80 years? Why not 100 years? Well, let's just make it so where you're leasing houses now. And maybe that's the goal. I don't know. Maybe they just want leasing. That's a whole different rabbit hole.
Well, it's called rent.
But it's like, hey, bro, we have that.
All right. So now I haven't heard anybody talk about it yet, but let's say the 50-year mortgage does become a reality. Dumb idea, but it does. The next thing you're going to hear about is the adjustable rate 50-year mortgage. And somebody's going to go, yeah, well, interest rates have been lower before, and it'll go down, and that'll be better. I'll pay less. Yeah. But we need to think back. Where have mortgage rates been historically in the last 50 years? They've been as high as 16%.
Yeah.
So that's not a starter. Now, here's the funny thing. Wait till you see this segue, Damon. This is world-class segue.
I like to write segues.
Yeah. And just for the record, I have never fallen off one.
Sweet.
But yeah, I know. If you take that logic of, I don't really care how long the mortgage is as long as I can afford a payment, and you're not thinking about how much interest you're going to pay in total, because that's down the line. That's our favorite word, hyperbolic discounting, not concerned about what it's really costing me. Well, that is the same kind of logic that we heard Meaty Mamma kind of say when she said,
make the minimum payment.
She's only going to make minimum payments and it will eventually get paid off, not considering what that future cost, of that situation is.
Yeah.
Same sort of thing. Both of them cost a whole bunch of money that could have wound up in your pocket.
Yeah. Well, I've seen in the last couple of days, I've seen proponents of this. Oh, it's a good thing. And the arguments always seem to be centered around, well, you take that $300 and then you invest the difference. And of course, some of these, you put it in Bitcoin and get 20% a year. Like, okay, whatever. And
nobody does that.
I've seen several arguments where you'll have $4 million. But here's the reality. They're arguing something where it's like, oh, the 50-year mortgage is good because you save the $300 and you can invest it. Well, let's go with that. Let's pretend somebody actually did that. I would argue, and Dave Ramsey would agree, you can also save $300 by just getting a less expensive house.
Yeah.
And then invest the $300. Like, what?
Yeah, and you know how else you could do it? You could live, and you could probably have saved that same $300 if you just rented instead of bought.
Yeah, there's a lot of ways you could save $300. So trying to make this argument that the 50-year loan is good because it'll put $300 a month in your pocket that you could invest is stupid. You can buy a less expensive house on a 15 or 30-year mortgage and go DoorDash your $300 a month. You don't have to lock yourself into a 50-year mortgage. Go deliver some damn burritos. There's your $300.
Yeah, and my strategy has always been, if you need to lower your mortgage payment at some point, I'm a big fan of the 30-year mortgage, 30-year fixed rate mortgage. And here's the thing. People go, well, I should get a 15-year mortgage because I can pay it off earlier. Yeah, but you know what? You have no option for any breathing room if something happens and you need that $300 a month. right? So you can get a 30-year mortgage.
And set up your own amortization schedule and pay it off in 15.
And just pay it back at the 15-year mortgage rate. And if some crap hits the fan, you can drop down to the minimum 30-year mortgage payment without ever going late.
Yeah,
but
and then someone will make the argument,
what do I know?
You save a quarter point or you save half a point if you get a 15 over a 30. And that's true, but you can look at that as just more like an insurance premium. You're going to pay a little bit more every month for the insurance of if something happens, you lose your job, your hours get cut back, sickness, whatever, you're killing it, you're paying this 15-year payment, but then all of a sudden it doesn't fit in the budget anymore. You can roll that back and save $300-$400 a month by paying what the bank's actually requiring on the 30-year without having to worry about the house going into default and getting foreclosed on and all that. That's worth an extra half a point.
Well, I'm glad Chiquita Banana isn't listening to this podcast because you know exactly what he'd be yelling at his phone right now. Idiot!
Chico Juanito too, Steve.
I wasn't leaving room in my brain to remember that.
Yeah, I was just sitting there going through on my Facebook page. I was commenting in forums. I like to go into all these gig worker forums and stuff and just, give back, help people out. Like I've been doing this stuff for a while on the side. I've learned a lot. And I get a lot of pushback because, when I say things like, hey, I make $40 an hour and people, that's impossible. I get
You're lying.
Inconceivable. You keep using that word. I don't think it means what you think it means.
Well, the bottom line on the 50-year mortgage is it might make that dream house look affordable on paper right now, but it's really just a way of stretching your lifetime debt further and deeper and robbing you of retirement savings when you need it.
Yeah, and it's going to do the opposite of what people are saying. It's not going to make housing more affordable. It's going to temporarily make your monthly payments lower, and then it's going to push, all else being equal again, there's a lot of factors that go into it, but all else being equal, it's just going to push prices higher, and they'll revert back to where they were at, all else being equal. And now you just have the same payment you would have had, but now for 50 years rather than 30. What a deal.
So here's one last statistic on the 50-year mortgage thing. For someone who says, yeah, an adjustable rate mortgage, the rates have been much lower than they've been higher. And so over time, that would be cheaper. Here's the funny thing. If you look back 50 years, the average interest rate over that 50-year period, 7%.
Yeah.
So you're really, it's really just marketing hype. It's just a way, my personal opinion is whoever floated the idea was trying to say, look, things are more affordable now because your mortgage is $300 less. But, we've covered all the reasons why that logic doesn't fly, but nice try.
Yeah, and I get the sentiment, but, prices are, in most markets, too high for the average person to afford. That's just the reality. So,
yeah.
Things are going to have to change. But and the other thing I think I failed to mention was all this does is this 50-year mortgage is just going to, like I said, keep prices higher, but it's going to prolong the potential recession is not the right word, but correction is probably a better word.
Mm-hmm.
Because if the average person can't afford the average house with all the bells and whistles and levers they have, people want to sell their house. They eventually have to lower the price if nobody's able to buy it. And it'll give us kind of the correction that we need. I agree that if you're already a homeowner and you're ahead of the game, then you're loving it. But if you're one of those that hasn't gotten into the market yet, you feel like you're screwed. You got no shot. It's out of whack right now. So some things are going to have to change, but financing a house over 50 years is not the way to fix it.
Well, let's look at the difference. So houses have become bigger and people have purchased bigger homes for, status or, their own behavioral economic reasons or whatever. So I'm 66 now, but when I bought my first house, we really there was no consideration of buying a bigger house. Yeah. We just got what we could afford. But because we got into the market then at what we could afford, and it was was a townhouse.
My grandparents' house in Garden Grove, I believe, was $12,000 when they bought it in Garden Grove, California. Little tiny house. I mean, back then, Steve, when you were buying your family was buying your first house, you would look at the house that you live in and I live in, and I'd be like, "Oh my gosh, that guy!
I know.
What does that guy do for a living? That's the governor's house. Oh my gosh!"
Yeah, but the reason is because
Nancy Pelosi's house.
I got into, real estate not with an intention that this is going to be an investment or I need to buy something that's status or anything else. I got in with what I could afford. And I would agree that right now with people who say there's a lack of affordable housing, yeah, there is a lack of affordable housing, but it's because builders are building bigger homes on which they make more profit.
Yeah.
So we're not going to solve that problem by extending the mortgages out another 20 years.
Well, and that's what people will say. They'll say, well, by extending the mortgages out, you help people get their foot in the door. And I would say that's technically true, but there's other better ways to save $300 and get your foot in the door. And like you said, maybe buy a little bit less house than you really want. But then you could say you get your cake and eat it too. You can get your foot in the door. You can get into the market, take advantage of the eventual appreciation, and not be killing yourself, and still save the $300 a month, and then put it in Bitcoin for your 20% a year or whatever you think it's going to do. There's lots of ways to save $300 a year. They make this argument like that's the only way you can save $300 a month. That's the only way you can save $300 a month is get a 50-year mortgage.
Now that you mentioned it, I have to look. What has Bitcoin done in the last year? Oh, minus 34%.
No, it's plus 20% a year, Steve.
Well, not over the last year.
Juanito Chico, too, said that. Oh, Chico Juanito. I got it wrong. Sorry, Chico.
Oh, he said it's 20% a year?
No, it wasn't him. I'm assigning him to all the things that are bad on the internet.
Okay.
He's become the poster child for everything that's wrong with the internet. Idiot! You're so dumb. It's as high as it's ever going to be. Sure, buddy.
Well, even in the last month, my Bitcoin holdings have gone down 16%.
Yeah. Well, it's a sure thing, though. You just got to get in now.
All right. So instead of wasting money, I'd like to talk about easy ways to save money. So from mortgages that make your wallet cry to groceries that drain your checking account. Oh my God, groceries. We need that rent is too damn high guy.
Yeah. Yeah. Well, that's where the $300 a month is going to go. It's going to go to the groceries. It's not going to go to some investment. I
know. Well, right now, you stare at the fridge, you open it up, and you look at the random ingredients in there, and you think, oh my gosh, I'm going to have something delivered by Damon.
You know what we need? We need a 50-year mortgage on the grocery bill.
Hey, you know what? You can now put your Instacart on installment plan.
Of course you can.
Yeah.
Because I'll gladly pay you Tuesday for a hamburger today.
So what do people do when they look, they get home and it's late and we don't have all the ingredients to make dinner, or I don't have this. Whether they're running to the grocery store and binge shopping or they're having something delivered, it all adds up. All those little dollars add up. But here's a trick that works and it's free. And it's something that Pam and I do all the time. So you can use ChatGPT to actually tell you what you can make with the ingredients that are already in your house.
Interesting.
Yeah. So you don't have to go run to the store. You can go to ChatGPT and say, we got some chicken, and then we have this and we have that. And in the pantry, we have these things, and we might have some leftovers and some random things in the fridge. And it reduces duplicate purchases of food and reduces food waste to do this because you're already using what you have. You're not paying for it again. So studies have shown that it actually can reduce the cost of grocery bills about $2,000 a year.
You got
here's an
Rosie
example.
The robot right on your computer.
You do.
Making your dinner.
You can get a ChatGPT account for free, so you don't have to pay for that. But here's an example. Okay, if you say, we've got some canned beans, some eggs, some onions, some rice, and some frozen spinach. You've got about 5 or 7 different meals that ChatGPT will spit out. And Pam and I do this. And the recipes have been really good.
Well, in the immortal words of Mick Dundee, you can live on it, but it tastes like shit.
No, it doesn't. It does not. I challenge you, Damon. I challenge you to do this.
I'm wondering if you've ever given ChatGPT your ingredients and it just came back with, you know what's popular right now? Fasting.
No. It always comes back with a recipe. And I challenge you and Kathy to do this. Just what you have at home. So,
Kathy and I could do it. What the real challenge would be is, will my kids eat it? That's the challenge.
It's not a Delmonico steak, but it tastes like affordability.
It tastes like there's a slogan for you. I'm eating at that restaurant.
Hey, I wouldn't discourage anybody from trying this because it really is something that saves money.
I think it's a great idea. I just like to bring the humor.
But here's another way that you can use ChatGPT.
Tastes like affordability.
Okay? That is a good line.
Yeah, write that down.
I made dinner last night and it tasted like affordability. Hey, how was that, honey? It was affordable.
It was affordable. Oh, you got to be a restaurant critic now. It's like made it up on the spot too. Look at that.
Yeah, that was on the fly.
It was.
So here's another way you can use ChatGPT. You can list what's close to expiring in your freezer and your fridge, right? And it'll come up with ways to either repurpose or preserve those items so you're not just throwing them away. But you can also use it to create lists of what you can afford to spend at the grocery store. And you can even say what your dietary goals are. And it will produce a smart shopping list that prioritizes versatile, low-cost staples that you can use. What?
When I ask you for your palate preference, affordability.
Yeah, well, affordability. Well, that is a palate preference. You know, how can I get the most use out of the ingredients that I can buy?
Honestly, for as much money as we spend on groceries, when you say you can save $2,000 a year, I was thinking we might be able to save $2,000 a month. Now, it would taste like affordability, but I bet we probably could.
Well, I bet you could too. You know what? You could even factor in whatever fad diet you're on.
I'm on the OMAD diet. It's actually working great. OMAD, 1 meal a day. That actually it tastes like affordability. I'll tell you that. I only eat dinner. It's been working great actually, and it's great for me because I don't focus on food anymore. It's just like I know I'm eating at dinner, so I can just focus on work. I don't have to take breaks to eat. And I'm kind of an all or nothing type of personality, right?
Yeah.
So it's perfect because I just basically eat whatever the hell I want between like 4 and 6, and that's it, p.m. and I'm done. And it works great.
Well, you just said you could save like $2,000 a month, but
probably could.
Yeah, I mean, studies show that the average person that does this, it encourages cooking at home, and that alone can save about $400 a month. You know, just not having to eat out. I mean, hell, these days, Pam and I went to Arby's the other day.
Crazy.
We got a sandwich and those little steak cube things, not the meal. That's what we got, and drink. It was $28.
Dude, I think I'm just stuck back when I was in the 90s or the early 2000s or whatever, but you can't. You go to McDonald's, you take your kids, it's more expensive than it used to be. Seems like not that long ago to go to a sit-down restaurant with tip and eat.
Yeah.
It's just, but they're all packed. We went to Texas Roadhouse on Sunday because we like to do Sunday dinners and go out in different places and stuff. And we just got done with Emily's softball tournament. We were there all weekend and it was late. And it was just Kathy, Emily, and I because the boys were at home. So they DoorDash some Domino's or whatever. But it's just the 3 of us And we didn't get a dessert or anything like that. We don't drink alcohol. It was, I think I had a soda, Pepsi, whatever. And it was, with the tip, it was $114 for just the three of us.
Now, the funny thing is that I don't avoid going out to eat because of affordability, okay? I avoid going out to eat because this is ridiculous.
Yeah, it's on principle, right? But that place was packed. And I'm like, where are all these people getting all this money? Like, there is just lots of money out there right now for some people.
I think at some point, though, that people just get tired of struggling and they just that's why credit card debt is climbing.
Well, that's probably a good point. They're just like, F it. Whatever.
F it, yeah. F it.
Go big or go home. Hey, I tell clients all the time, if you're about to go bankrupt, it doesn't matter if you're filing bankruptcy on 50 grand or 60 grand. So I'm not telling you what to do, but
dinner out. Ball up.
And if anybody says I said that, I will deny it. Steve, that's just between you. Just between you and me, Steve. Just between you and me. I would not recommend that.
It reminds me of that Taco Bell guy. You know, the pay it forward guy.
My meal was $2, bitch. That one.
Yeah.
I was not aware that I was in line behind the family from Cheaper by the Dozen 3.
It was a pay it forward thing.
Yeah, my meal was $2.
I get theirs.
Yeah, I get theirs. I'm at Taco Bell. Ball out, right? Are you sure? Yeah, I could use some good karma today. Their meal was $32. We're at Taco Bell, bitch. Now that meal at Taco Bell would be $65. This was back in like before COVID. This was a pre-COVID $32, which was a very surprising bill to get at Taco Bell, where the burritos were 99 cents.
I wonder if you could, I'm sure you could find that video by going to YouTube and searching for
100%.
Taco Bell pay it forward.
Yeah, go to YouTube. If you haven't seen it, the joke will be even funnier because this guy's delivery is spot on. But go to YouTube and search Taco Bell pay it forward. It'll come up. And it's like 10 or 12 years old.
I happen to be on YouTube right now.
Yeah. Not aware that the family behind me was in Cheaper by the Dozen 3. My meal was $2.
Oh, here it is. Here it is. Hold on a second.
Can we splice it in?
No, I'm going to, hold on.
So I'm like, bet, I feel like a good person today. Today too, shit, let me pay for the person behind me. I should have known what I was getting myself into when this bitch looked at me and said, are you sure? But I was like, fuck yeah, I feel like a good person. I can use some good karma today. You know what I'm saying? So shit, here's my card. I got it. All out, right? So the lady come back and hand me my receipt. And would you believe these fucking assholes behind me ordered $49.56 worth of fucking food? Now what the fuck was they trying to feed all the starving children in Africa? We had Taco Bell, bitch. My meal was $2. What'd you get, a 50-layer burrito? I wasn't aware that the family from Cheaper by the Dozen 3 was in the car behind me when I made my fucking decision. All I know is I better have good karma built up for fucking months. Shit. I don't feel good about this. I feel broke. So I just got out the drive.
Okay. Could you hear that okay?
Oh, yeah. It came through. That was yeah.
Okay.
I don't feel good about this. I feel broke.
Said the guy that just got a 50-year mortgage.
Yeah.
That's what the real estate agents are going to tell you when the 50-year mortgage is available.
Yeah.
Ball out, bitch.
Yeah. I could use some good karma today. Are you sure? Bet. You never know what you're going to get on this very scripted show.
You get what you pay for. All right. So, hey, listen, if you haven't done it yet, look at whatever podcast platform you're listening on right now and click subscribe or follow or plus or click or whatever. And You could get some good karma by leaving us a 5-star review on whatever platform you're listening on. That helps. And it'll help you get a little tiny bit of good karma. So I appreciate it.
Ball out.
See ya.
Peace.